Hey everyone, welcome back to 5-Day Crypto. My name is Chase. Today we're going to be talking about Synthetix, also known as SNX, and we're going to see where it could be going in the short term and the long term, what it's looking like now as far as strength, and the current price action. Now, I don't hold this coin. I'm not endorsing this coin. This is not a paid promotion. I'm just making this video to try to help those that do own it, just showing you some helpful tips on what to look for and anything I can help you with. That's what I'm making this video for. I make videos 5 days a week, making about 10 new videos a week now. They're all for free. So Synthetix is currently ranked our 27th ranked coin out of 8,413 cryptocurrencies. It has a $2.5 billion market cap, so it's very strong. Anything over $1 billion is generally a nice project. It has a lot of volume, a lot of good fundamentals behind it. So generally that's what I look for, anything over $1 billion. So the price action, you can see as of late, is just exploded since mid-December or so, back in here. The past 24 hours, as you can see, it's up over 15%. The volume has been going up as well. If you look in this gray region, that is the volume. It's just exploded over the past 6 months or so, since last July. And just recently, the volume has just gone off the deep end. So that is good news. If you want to know more about Synthetix, you can read about it on CoinMarketCap or just pause the video. Let's go ahead and get into the chart now and see what we're looking at. So this is on SNX versus the US dollar on the daily. As you can see, I've drawn a channel here. We have good formation of a top line, good formation. This is the most touch points. You can see how many touch points we have here. So that is a nice solid top line. If you get up towards that, generally it's going to act as resistance. If you ever break above that, that is a very good sign considering how many touch points you have. If you break that, you'd want to hold it as support if it ever moves back down. But in the meantime, your bottom channel is down here. Now this is kind of a weaker bottom line because look at the bottom. There's not a whole lot of touch points. We got one here, maybe about 4 touch points so far. And we just recently touched it again. So every time you test that, it's becoming a little bit of a stronger support for you. So if this continues to move back up in the coming days, there's your top line. So far, it's held as resistance. We want to break that and continue to break out of it, close at least 2 daily candles above it, and then you have a confirmation of a breakout. You have to have 2 closes above, not a wick. You can see all the wicks we've had. A wick is just showing you where prices were, the bodies or the closes and opens. So on a green candle, a body close is at the top. On a red candle, a body close is at the bottom. So that means, like on this candle, for instance, we opened up right here because that candle closed, right? Price action went all the way down here and then eventually closed back up here. So that's how you can read candles if you don't know. So that's what I would look for in the coming days. The yellow line here is our 21-day moving average. Generally, you want to hold that as support, which it has so far. It has not closed 2 daily candles below. You might look at this area, but that's why we look for 2 daily candles and not 1 daily candle, because the first one closed right here, right? The next one did look like it might close, and it sparked back up and closed right here. So it's still closed within your channel. So this is still a-okay. So that's what to look for. If we start breaking down here and you close 2 candles below it, then that's a cause for concern. If you start breaking your 21-day moving average, that's an exponential moving average, so it changes with price more rapidly than the simple moving average. So that's why I use those. Some people like the simple moving averages. Those are called SMAs. This is an EMA. You can see on the left here. I like to use the 21, the 50, the 100, and 200. And if you go up to a higher time frame on a coin that has more history and more volume and stuff like that, then it has more weight the higher time frame that you go. So on a weekly chart, a 21-week moving average is usually very strong. Versus on a 4-hour chart, if you have a 21 line, that's a 21 4-hour moving line. So that's your 84-hour moving line, if you could follow that math. Those are not as strong. If you look at Synthetix on our weekly chart, you can just see it's just up and up and up and up and up. These are weekly candles. There's 1 week, 2 weeks, 3 weeks, 4 weeks, 5 weeks, 6 weeks, 7, 8, 9 weeks of doing basically nothing but up. Now, we've had a lot of volatility in those weeks. As you can see, these are huge price swings. $17, $18 down to 11 in a week's time, multiple weeks in a row that's super volatile. Building volume, anything with a young, this is a younger coin, so you're going to have a lot more price action and volatility usually in the meantime. Bitcoin is not going to be doing these kind of movements because it has more value in its market cap. It's harder to move the Titanic than it is a little buoy yacht or a little motorboat. So that's what I have for you for today for SNX and Synthetix. If you have any questions, leave me a comment below. I'll be happy to do a different coin of the day tomorrow. We do a coin of the day every afternoon, 5 days a week. If you want to have something covered tomorrow, leave me a comment below. Let me know what that is. Anything you need, I'm here for you. I appreciate you tuning in. Please like and subscribe. I'll see you right back here tomorrow morning. Thanks, guys.